What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we did see more volatility after we did see that warning sign in the VIX. We also have a lot of big tech earnings to get through this week, so it should be a very interesting and most likely volatile week. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we went down 0.46% and the price action is still closing over the 5 EMA with the bull trend. You could see we did have plenty of volatility and we came back down right to that support level at 436. Let's switch over to a 1 hour chart and you can see just last night I said we reached that price target at 441, and every time we hit one of my price targets, it's always possible it could trigger a pullback and or a correction. So as you can tell, we perfectly got rejected off of that price target and we came back down to that support level at 436, almost within the dollar to dollar move. This was our strong resistance and this is our strong support, and we're starting to see a bounce off this level. There's always the possibility when you see a bounce after a pullback that it's going to be one of these ABC looks, which does mean we could continue to see more downside after this pullback. Typically pullbacks are about 2 to 3 days long and this is only day number 1, and we do have a lot of big tech earnings this week, so there is plenty of reasons for a further pullback. Remember, sell the news is always going to be one of the options. Even if the earnings reports are blowout earnings, there's still the chance that people take profits and you still see the stocks going lower. So don't get fooled by the market, follow the price action and stay objective. Don't just assume anything has to happen because of one way or the other with the earnings reports. So right now on SPY, the critical support is down here at 436 and we still have critical resistance at 441. Jumping back over to the daily chart, you can see that there's nothing technically wrong with the chart. The price action is still over a positive sloping 5 EMA and we still have a bullish trend, but that doesn't mean we can't see volatility and a pullback from these levels. Your strongest support level is always going to be this positive sloping 20 simple moving average, which is now sitting right around SPY 434. So if we finish closing that gap at 436 and continue to sell off, look for support at 434. Below that, you have strong support at 430 and 429. We do have resistance above 441, and if we break out above that level, we could start running to the next price target at 446. So look out for that critical resistance as well. But overall, this is still a bull market, and in a bull market, you will see people buying the dip. So any pullback is still considered a buying opportunity until we lose the bull trend. Jumping over to the NASDAQ 100 triple Qs, we could see a lot more volatility today, going down 1.1%. Intraday, we did bounce off of that support level right at that 20 simple moving average, which is still our critical support at 360. We did break and close over our price target at 367 for 2 days, but now we're back below that level, which means it will be resistance once again. So to the upside, you have resistance at 367, the previous all-time high just below 369, and our next price target at 370. To the downside, you should have strong support around 363 and that $360 20 simple moving average. As you can tell from the price action, we did close just below the 5 EMA, but overall we still have a strong bull trend and we could continue to push higher. If you start to see price action closing below 360, we will likely lose the bull trend and we could come back down to the 50 EMA at 350. So watch the price action closely because it's going to tell you if this market is going to roll over or if we're going to bounce off support and try to put in another all-time high. On the Dow Jones, we're back below that resistance level at 351, dropping only 0.22% today. We did close the gap below so we can get rid of that, and we still do have critical support down here right around 348. So 348 will be strong support, and below that we're likely closing the gap at 346, and our 50 EMA on the Dow Jones is at 344. So look for resistance at 351, and on a break above that, we could start running to the next price target at 355. We still have the bullish trend in all 3 indices, so there's still no reason to call a market rollover until we see a price action confirmation. On the Russell 2000, we're still in a bear trend and we continue to see the Russell 2000 getting bear rated, going down over 1.1% today. We're back below that support level at 219, which means it now is going to act as resistance, and we did get very close to that support at 215 before we saw a bounce. Remember, this is a bear market for the Russell because we have the price action below all the moving averages and we have a full bear trend. The bears will continue to raid the Russell until it can get back above about 224. So don't expect to see the Russell 2000 going up until it can break back over that 50 EMA and try to regain a bullish trend. This is a bear raid and it's very possible the IWM is coming all the way back down to about 209. So look for a break below 215, and that should tell us we're retesting support at 209. To the upside, you're looking for strong resistance at 219, 222, and 224. On the ARKK ETF, we dropped 2.45% today, and we did test that support level right around 116 intraday, and we did see a bounce. So right now, ARKK is below that critical support at 120, which means that level will now act as resistance. Remember on ARKK that we never had a bullish trend, and we still don't have a bear trend, but it did look like we're finishing out that ABC correction, and we're ready to go higher. So this could be a pullback before we continue to extend higher, so look for a potential break back above 120 as a potential buy signal. You'll have critical resistance at 120, 123, and then 128, and your critical support levels are still going to be 116 and 112. On the VIX, I was saying just last night that we did see a warning sign because we saw the VIX going higher on the same day the S&P 500 went higher as well. That is normally a divergence that you don't want to see, and today we did see the VIX spiking, going up over 10% and closing at 19.3. Remember, we need to see the VIX over 20 before we consider this a more volatile pullback and or correction, and right now the VIX is below 20, so continue to watch that level closely. If we see the market crushing the VIX back below 18.2, we could continue to see the bull rally go to brand new all-time highs. So look for the VIX below 18.2 as bullish and the VIX above 20 as a volatile sell-off. On TNX, we continue to see the bear market, and we do see rates continuing to head lower, going down 3.45% today. Overall, the low rates should be bullish for the stock market, specifically the tech sector and the growth sector. So do continue to watch TNX because the lower it goes, we still do want to be bullish on the tech sector. On TLT, we were up a little over 1% today, and we still see a bull market in TLT bouncing off of that support level right there, right around 148. So we will continue to watch TLT very closely because if it does start to go parabolic yet again, that could be another sell signal for the stock market. On the dollar, we did close below the 20 simple moving average today, but we still have the bull trend, but it is in jeopardy of being lost, and we could be rolling over. If we see the dollar roll over, that could be bullish for gold and silver. On gold, we're still going absolutely nowhere, hanging around that support level at $17.99. We still have critical resistance above at $18.11 and $18.29, and downside support at $17.76. On silver, we continue to see weakness, and we did close below support at 25.1, which means we could be coming all the way back down to 23.5. There will be some support levels on the way there, but that is the most critical support level that silver could be heading back towards. Look for resistance at 25.1 and 25.6. On Bitcoin, we're currently up about 3%, and Bitcoin is getting ready to retest that resistance level at 39,000. On a break above that, we want to see a close above 41,000, and we want to see the price action staying over critical support at 35,000. Bitcoin is starting to build up a bullish trend yet again, and we just need the 20 simple moving average to get back over this 50 EMA. So overall, if Bitcoin can stay over 35,000 and break and close above 41,000, it will be in a full bull market, and you will want to try to buy the dip. But right now, this could just get rejected at 39,000 and come back down to 30,000 in a hurry, so don't get bull trapped. If you weren't buying at support for the last month, the last thing you should be doing is chasing this parabolic rally. If you got in at support, let it ride, but don't chase something you missed out on. So watch that critical resistance at 39,000 and critical support at 35,000. On Amazon stock, we did see a volatile sell-off going down 1.98%, but we still see the price action over that 20 simple moving average of support at 36.13. If we break below that, look for support at 35.52 and the 50 EMA down here right around 34.90. We still have the bullish trend, and I still do have price targets on Amazon that could take it all the way up to 3,800 around earnings. So look for upside resistance at 36.55, 37.60, and 3,800. On Tesla, we did see a sell-off after that earnings report, and we did close down 1.95%. We bounced off that critical support around 626, and we closed below the other critical support level below 649. So look for critical upside resistance at 649 and 658, and we need to get back above 658 for Tesla to start looking bullish. If Tesla breaks below the critical support at 626, it will be looking bearish, and it will likely come back down to retest support at 594, and below that we could be coming back down to 546. So watch that very critical support level at 626 because Tesla needs to stay above that level for any hopes of going back into a bull market. On Apple stock, we were down about 1.5% today, and we did see the price action closing below the 5 EMA and below that support level at 148. We still have the full bull trend, and the critical support will now be right around 144, which is that 20 simple moving average. Below that, it'll start looking like we're rolling over and you need to hold that support level at 143, or we could be coming back down to close the gap at 137. Overall, if we see Apple breaking out after earnings and getting back above 148, we could be well on our way to the next price target at 156. But as you can tell, Apple is definitely struggling around the 148 resistance area, so don't just assume it has to get to 156, it needs to prove itself, and we need to break out above the previous all-time high right around 149. On the financial sector, we were flat on the day, and we still see the financial sector consolidating around the 50 EMA. At this point, the financial sector could break out in either direction, so you need to continue to watch it closely. On the industrial sector, we dropped about 0.5% and we closed below the 5 EMA, but we still have the full bull trend. On the healthcare sector, we were up 0.47% today, and we still see a very bullish healthcare sector with bullish price action and a bullish trend. On the energy sector, we were down 0.93% today, and we still see the energy sector in a bear market. We have the full bear trend, and the price action is below 3 of our 4 moving averages. So jumping back over to the S&P 500, remember it's very likely this is going to be a volatile week. Anytime you have earnings, it doesn't matter if the earnings are good or bad because it's always possible you see a sell the news event, even if the earnings are a knockout quarter. So be objective and follow the price action and the trend, because even if we do have bullish earnings and we see the price action rolling over, we still need to react and we still need to make sure we're protecting ourselves to the downside. Right now, we still have a bull trend and we still have bullish price action, but that could change very quickly, so you need to remain cautious. As long as we're above critical support, you need to remain bullish because it's still a bull market and we still could bounce and continue to go higher. Don't get overly bearish just because of the noise. I know there is a lot of fear out there, and we're definitely seeing it in the VIX with the elevated levels. Stay objective and make sure you're paying attention to the price action. Also remember that I do have my trade alert service that only trades TQQQs, and it's called BANC Trade Alerts. It's very simple to follow, and all you need to do is execute the trades. You will receive all the buy and sell alerts directly via email and text message. BANC Trade Alerts does well in all market conditions, and I'm currently running a 50% off promo code for your first month, so now is the best time to try BANC Trade Alerts. If you're interested in checking it out, you can find out all of the details in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.